South African businesses are increasingly becoming part of the global marketplace, and this is forcing entrepreneurs and business owners to understand the intricacies of the foreign exchange market. On Finweek Money Matters this week, we look at the trends that are taking shape in the foreign exchange market, including what currencies are hot and the challenges business owners are facing with regards to dealing in Forex. We're joined on the desk now by Peter Ratty of Treasury Sales and Structuring at Investec. Peter, thank you so much for joining us.
Okay.
So are you finding increased demand, not just, of course, we've always known the big multinationals here in South Africa have, huge teams that know how to, and a lot of experience dealing in the Forex space.
Yes.
But are you finding increasingly kind of entrepreneurs and small business owners, medium-sized businesses coming to you and looking for ways to help them deal with the issue of Forex?
Absolutely. I think the biggest change that you've seen over the last few years in the currency markets is for years and years in South Africa, there was always a mindset that the rand was a one-way bet. So you always anticipated, you sat down at the beginning of the year, and that actually was irrespective of whether you're a multinational or a small importer-exporter. Take the agricultural industry, for instance, where you have farmers producing grapes and citrus and the likes. Well, they sat down at the beginning of every year and they said, what are we going to do from our currency perspective? And what they decided to do was sit on their hands, because by the end of the year the rand had obviously depreciated, and that was a trend and a mindset that developed with South African companies. Obviously the last sort of 4 or 5 years we've seen a radical change in that kind of behavior, particularly with South Africa becoming an attractive investment destination for global fund managers who for a long time have been playing this yield play. So they see South Africa, the yield that you achieve based against currencies like the dollar, the euro, etc. Now what that does is it makes a different kind of behavior happen in the exchange rate. So where rand, you looked at the basic fundamentals and you expected them to have the negative impact on the rand, this is offset continually by these offshore fund managers coming and buying rand because they see the attraction of the yield in South Africa. So what this has forced now is multinationals, your smaller corporate guys, they actually have to sit at the beginning of every year now, and they've got to say, well, what are we going to do in the currency market this year? What are the trends? There's a lot more dialogue happening with banks and analysts from across the sectors as to what the anticipation in the markets are going to be for the year, the behaviors that are expected. And from that, they're starting to determine more strategic currency management, because the fact is the currency is actually quite an important component to their final yields that they're achieving by the end of the year. So yes, we have seen a big change in the market behavior.
I used to work as an FX strategist, and the rand is a notoriously difficult currency to play because, as you said, it's not just determined by your fundamentals like the trade deficits, any of that. A lot of it is actually, it's a very high beta currency.
Correct.
So it tends to overcorrect, go incredibly strong the moment that you have risk on situation, and fall to pieces when it's risk off.
Yes.
What was interesting though is that the type of instruments that people were using in order to actually hedge their risk tended to be very, very vanilla.
Correct.
What sort of products are you seeing coming through as an interest from businesses that are smaller? They don't have the capacity of a multinational to execute a very large trade. What do they look at?
What is interesting is the multinationals are very controlled by policy when it comes to the way they manage their currency exposures. So what you're actually seeing right now is the smaller guys becoming more dynamic in the way they manage and the instruments that they're willing to use in the management of their currency. About 2.5 years ago, and an important part of this is a change in our own local regulations from the SARB. 2.5 years ago, the Reserve Bank came out and introduced this concept of active currency management, which allowed, as you had rightly pointed out, you had vanilla product that you were pretty restricted on what you could do. So the Reserve Bank came out about 2.5 years ago, they introduced active currency management, which allows companies to now be more nimble and to introduce flexibility in the way that they manage their currency exposure, which is a very big thing because, as you've pointed out, the massive movements that happen in the currency from time to time, you need that flexibility to be able to take advantage when the currency moves in your favor, and also be able to use instruments that prevent and mitigate some of the risks when the currency is moving against you. So what we've seen now in your mid-sized companies is a lot more companies looking at introducing optionality, i.e. buying currency optionality, selling a bit of optionality, and in doing so, what they in essence are doing is introducing an insurance type policy on their currencies, but at the same time allowing themselves the flexibility to take advantage of good moves that support and add a bit to the bottom line of their businesses.
It's interesting. We had Paulo Fry coming through from Bentley, South Africa, and I said, what's the pound rand today, Mark? And he immediately said to me, 14 rand 70. So that just shows you, so many businesses here in South Africa, especially importers, of course, exporters, are acutely aware of where the currency is at on any one day. But tell us about some of the trends when it comes to kind of new emerging markets. And of course, China's not a new emerging market, but it is becoming an increasingly important player for South African companies. How do you deal with countries like this that don't have as open Forex markets?
Well, I think the two things to think about where trade is happening now. One is when we talk about exporters, we've got our traditional old agricultural type exporters exporting to the world, very active in Europe, very active in North America, etc. But you've now got an increase of exporters exporting into Africa. Guys that source a lot of commodity here in South Africa and export into the rest of Africa. Now, you kind of seen two schools of thought and behavior there. One is that it's all still very dollarized. So there, the main currency is still dollar rand, and guys are still thinking dollar rand, etc. But now remember, all these guys that are exporting to Africa, their expense base is rands. So quite a lot of them are starting to say, let's eliminate currency risk from our business, and we'll actually invoice African countries in rands, and we'll pass the exchange rate risk onto them. So you're seeing a bit of that behavior start to happen. On the other side, you talk about China, you're absolutely right. When you've got your smaller importers, etc., where they're all importing from? China. Till recently, it's all been dollarized as well. So, and we haven't seen the big shift yet. So the market is still very dollar rand determined. But what you're starting to see happen from Chinese exporters now is they're starting to say, well, look, how about we start invoicing you in renminbi? So you are starting to see this because the Chinese exporters have a renminbi cost base, and they're going, we're tired of the risk ourselves. We'll give you, South African importers, a discount if you're willing to. Now, you're absolutely correct. There are restrictions around being able to source renminbi, etc. There's quite a lot of red tape that happens in the process. For a South African importer to be invoiced in renminbi by a Chinese supplier, that Chinese supplier has to be registered with the central bank in China. There's very stringent cut-off times and a variety of hurdles, but that is starting to change, and we are seeing a movement towards South Africans getting invoiced in renminbi.
Well, we've got Hilgard Human, is the CEO of FXB Africa, joining us from our Cape Town studios to give us some insight into hedging risk when it comes to currencies in Africa. So Hilgard, thank you so much for joining us. Just give us your view and your type of approach to ensuring that currencies aren't a major play when it comes to ultimately your bottom line when you're doing business in Africa. What are some of the strategies that you advise your clients to take when it comes to ensuring that that risk is mitigated with, for example, some very volatile currencies we saw last year in East Africa?
Yes, with the currency market having the ability to move about 20 cents to 40 cents in a day, depending on news or depending on the markets, there's a huge risk for companies that are dealing in foreign markets or importing and exporting. What we need to look at is we need to look at ways of making it easier for companies, South African companies in the export-import market, to exchange currencies or to have the ability to pay their suppliers in the foreign currency, and also then obviously to receive their payments. So steps have been taken to improve this ability and to also make it easier for clients to transact internationally.
Hilgard, are you seeing a lot of interest in the emerging market currencies, the renminbi, yuan, and the likes, or is it primarily still dollar, euro?
Absolutely. The increase in export and import in South Africa is tremendous. We need to look at these markets, and companies need to acutely be aware of what these exchange rate fluctuations are, and needing the ability to look at live platforms and live price movements, and also to gauge their corporate finances around that. I mean, the bottom line change in a currency fluctuation could be enormous for the guys that are transacting in huge volumes. So, you know, whatever costs can be put in place, or any steps that could be put in place to save these companies any costs in terms of transacting is very important, and especially for the small SME companies, it could make the difference for a company to end up in a profit or in a negative balance on their transactions. So yes, very much an important matter for companies and CEOs and the CFOs to look at.